Okay, ready to go? Okay. We're going to call the meeting to order. We have an agenda. We're going to go a little out of order. We have a guest from our CPA firm. What's the name of the firm?
Melanson Heath.
Melanson Heath, and I apologize. And
It's on.
we're on.
It's not even look up.
Yes.
We're ready to go. And you can introduce yourself and your position in the firm. So
Sure. Good evening. My name is Scott McIntyre. I'm one of the principals. I've said partner for years, but now I'm told we need to call ourselves principals at Melanson Heath. Pleased to be here this evening. First and foremost, I'm pleased to be here only 4 months after we were here back at the end of September. It's almost 4 months to the day. One of the things that I've spoken about with the committee was escalating not so much the closing, because you've always closed your books on a timely basis, but the formal reporting that involves capital asset accounting and OPEB reporting. So I think what we talked about at the end of September of last calendar year, when we closed out the 17 audit, was getting the having this meeting in the month of January, and it certainly is great to be here. We'll walk through the financial statements in a fairly robust manner. I'm not going to walk through every single page in there, but it is my recollection that the committee likes to get into a fair amount of detail. But to me, the most important communication tonight, it deals with the timeliness of not just the closeout of fiscal year 18, but all of the things that are external to the town maintaining its general ledger. And that involves capital asset accounting and some of the new accounting standards that were implemented this year. In particular, GASB 75. That was something that, or a related standard, GASB 74, a year ago, caused a fair amount of delay in the conclusion of the audit process. Before I get into the numbers, I usually like to talk with groups like this, whether it be an audit committee or a city council, is to let you know a little bit about how the audit went. It's probably the most important communication, because the underlying numbers in here tie back to the accounting records of the town. So there really aren't. I don't expect there to be any surprises in the numbers. Certainly not in the fund basis numbers. But the results of our audit were very positive. Not only is it very timely, but once again for fiscal year 18, we found the books and records to be in good working order. And what that really means is that we found reconciliations on key balance sheet accounts were being performed on a regular and timely basis. And as a result of that work, through our audit process, we did not need to propose any significant audit entries as a result of our work. We did assist in the conversion, if you will, from the town's fund basis general ledger to the government-wide financial statements. But in the governmental world, in the governmental audit environment, that's very, very routine assistance that's provided as a non-audit service. So, again, pleased to be here at this early junction from June 30, 18. Here it is, just 7 months later, and I want to just take, he couldn't be here tonight, but one of my fellow partners who oversaw most of the field work, his name is Ed Boyd. He worked with Wendy very, very closely, and she was very helpful in bringing things to a conclusion here and for this meeting. He had a dental issue yesterday and couldn't be here, and even if he was, you probably couldn't understand him. I'll just leave it at that.
And thanks, your team, obviously, for wrapping up a year so quickly. After the last one, it's I know you've been here a while and have it down, but it's still appreciated, and the numbers and the explanations and everything. It's really good to see. Thanks. Thank you.
There's 2 documents that I'd like to walk through that are the result of the audit. One is the annual financial statement. It's the thicker of the 2 documents. If you have them, I see some have hard copies, some have.
Are there any extras? Okay.
I printed.
And the second one is a management letter where I'll just talk very quickly about some of the observations we had as a result of our field work. I know Wendy's still getting a copy to some members, but I can always step back and go back to prior pages. But while she's doing that, I wanted to point out page 1 of the financial statements is our independent auditors report. It goes on for about 3 pages. It talks about the auditing standards that we followed in performing our work. There's two sets of auditing standards that we followed, generally accepted auditing standards here in the United States, as well as government auditing standards put out by the Comptroller General of the United States. Those standards are very, very similar. There are some differences. I could speak about them if any committee member would like. But as a result of following both those sets of standards and all of the test work that we did, our conclusion as a result of that test work is that your financial statements are totally in accordance with generally accepted accounting principles for local governments here in the United States. So it's the highlight, if you will. It's not news because it's been that way for many years, but still I think any conversation about the audit results needs to begin with the opinion. So, following that is pages 4 through 11. It's your management's discussion and analysis. I'm really not going to speak about those pages. It is a great resource to go back to at a later point in time to understand why certain key account balances may have changed. With this committee, thinking back to the last time I was here, I'm going to start in on page 12 and almost go through page 16. My recollection is the committee likes to get into a fair amount of detail. MD&A is summary information. Again, it's a great resource to go back to at a later point in time.
Can I ask you one question before you skip ahead?
Of course.
And, on page 6, financial highlights, the first one, the $48.7 million negative net position.
Mm-hmm.
I'm assuming that's the unfunded retirement.
It's a negative situation
It's
predominantly because of
that's
the
the
two
negative.
accounts,
Yep.
your net pension liability
That's right.
and your net OPEB liability.
Can you go, because not everyone was here,
Yep.
the other liability, the OPEB?
Sure. OPEB is an acronym for OPEB, Other Post-Employment Benefits. And by other, they really mean other than pension. So what does that really mean? It means it's retiree health care.
Okay.
It's the healthcare liability that employees have earned or are earning during their time of providing service to the town of Easton. While on the subject matter of OPEB, that's, and it's on page 12, I'll get into it in a minute, but there is something very new in fiscal year 18. You implemented one of the newest accounting standards called GASB 75, and it changed the way this retiree healthcare liability gets reported in your financial statements. Approximately 7 years ago, GASB came up with, at that time it was statement 45, that basically said we're going to bring on this liability incrementally. You were required to have a funding schedule for this liability, and if you met your funding schedule, you had no liability. Easton, like many communities in Commonwealth, didn't meet their funding schedule, so they were incrementally bringing on a liability. The GASB said, well, that really isn't proper. The full amount of the liability should be shown on the face of the long-term prospective balance sheet, and then that's why they came up with GASB 75. So for fiscal year 18, you're going to see a huge increase, and it's called your net OPEB liability on page 12. Back June 30, 17, it was called your net OPEB obligation. It's minor terminology difference, but the major piece is that the liability is a significant increase. I'm going to turn over to page 12 now with that little bit of a sort of background information. Page 12, again, is a long-term prospective balance sheet. First column of numbers, basically those are your governmental funds, your general fund, your grant funds, revolving funds, and capital project funds. The middle column, the business type activities, those are your enterprise funds. On this page, page 12, I'd like to focus on the first column of numbers, which again is your governmental funds. Your general funds included in here, but this is all your governmental funds reported on the accrual basis. Now, the number that the gentleman asked me about early on page 4, I believe it was, of MD&A, is the last number on in that column, the $48,752,000 in parentheses, indicating the total net position is a negative $48, almost $49 million. If you look about 2/3 of the way down that column, you see two liabilities we've spoken a little bit about tonight. The net pension liability of $33 million, and then right below that, your net OPEB liability of $124 million. First, the net pension liability, $33 million. That's Easton's proportional share of the unfunded liability at the Bristol County retirement system. As a point of reference, a year ago, that number was $35 million. So that liability has actually come down a little bit. And mostly it's come down because of favorable investment earnings and that liability is measured as of 12/31/17.
And those investments are determined by the county, correct, not by Easton?
That is correct. It is all run by the county. And there's a wealth of footnote disclosures in the document that, I suppose if you have trouble sleeping some night, it's good reading. But the one part of the note that jumps out to me is the discount rate that the plan is using at about 7.75%. We're starting to see those rates trend downwards. It would not surprise me if going forward that maybe becomes 7.5 or even 7.25. And as I think the committee would probably be able to ascertain, as that discount rate drops, that liability it goes in the opposite direction. You actually see some disclosures in your notes that if your liability is $33 million at 7.75, you see what that liability would be at 6.75. Somewhere buried in the notes is that disclosure. So I don't have a crystal ball, but I would imagine that as we've seen it throughout most of the Commonwealth, those discount rates are coming down.
I've got one more question, and Wendy, you might be able to deal with this better. Or Roberta, because you work on the budget annually. The annual expense, the annual pension, the actual annual pension expense and OPEB expense, how much is that? That we actually have to pay?
The amount that we pay to Bristol County is it's in the $4 million range. We have the assessment for fiscal '20, it actually went up 8%.
8%?
Yes.
And that includes OPEB and pension liability?
No, that's just pension.
That's just pension?
And as far as OPEB goes, right now, we are only budgeting for expenses on a pay-as-you-go basis. So for the healthcare, we're just paying the town's share of the retiree healthcare premiums, not any extra towards.
The town should never pay
Towards
more
a
than premiums
liability.
anyway, right? I mean, that's all we should ever pay, correct, is the premium? So,
Well, we should be putting money aside in an OPEB trust
right.
to
right.
fund that
Right.
unfunded liability.
Got it. And $4 million is roughly what percent of the budget?
2%?
2%? Okay,
Or 5%?
okay.
Probably closer to 5.
5%?
5%.
Okay. So even though we have a big number, generally 5%, is this what you find in most towns? Are our numbers consistent with what you see in most towns in Bristol County, better or worse, or?
By and large, every community in Bristol County is going to have a similar liability proportionally.
Mm-hmm.
Your proportion is based on your contribution, which is based on underlying employee data. Everything from date of birth to age to compensation, pensionable wages, and things like that. So the plan itself, I'd have to look back on probably page 82 or something like that.
Sure.
And it'll tell you that the plan is X% funded. And every participating employer in the county plan is going to have the disclosure in there that the system's 60-something% funded.
Yeah, Bristol County, I think the last valuation was 67.7%,
Okay, great.
which is,
It's
and they're on track to be they're supposed to be fully funded by 2028.
Is that a state requirement, or that they become that, or
I'm not sure what that requirement is,
No,
but I know
it's-
that's,
it's just a goal?
it is, but that's, I think, part of the reason why our assessment went up 8%.
It was because of that mandate, if you will, that to get it to
Or
the.
at least a goal, it
A
might
goal.
not be a mandate.
Yeah,
but
all right,
might be a
great.
projection or a goal.
Okay. All right, thanks. I'm
No,
sorry. to
no
interrupt
problem.
you.
No,
By now you
everything-
flashbacks of 4 months ago when I wouldn't stop asking
you know,
questions.
page 12, I really like it when people pay a little bit of attention to this page. I meet with some groups, and they just want to get to unreserved fund balance on the general fund balance sheet. And we're going to get there. And there's a lot we can talk about and need to talk about there. But I don't think we would be doing our job as well as we think we need to without highlighting these two numbers. They're sometimes very difficult things to talk about. We talked about the net pension liability of $33 million. Right below that is your net OPEB liability of $124 million. Now, just as a point of reference, a year ago, under the old accounting, that number was about $50 million. So the implementation of the new accounting standard, had that number go up substantially, $75 million. It's not as if that's a new liability. You could have gone to one of your last pages in your prior year financial statements and seen a liability probably very close to that $124 million. It just wasn't on the face of the balance sheet. Financial institutions and rating agencies, however, knew to go to the very back of the report and see what that total net, not total, but the net OPEB liability is. I think in this environment, meaning a small group around the table here, it might be a good idea, if we're talking about the net OPEB liability, to also just bring into the conversation at this time, all the way over on page 22. Page 22, and we're going to go back to the general fund and all in a few minutes, but page 22, that first column of numbers is your other post-employment benefit trust fund. And actually, it's probably more beneficial to go one more page to page 23, that first column of numbers. It's the same fund, but this is the statement of changes in the fiduciary net position. In other words, it's what's gone into the fund and come out of the fund. In the end, I think what's important to point out is there's two very different, but I think positive ways to look at it. That bottom number there in that first column of numbers of $114,000. The positive news is Easton set some money aside, and you have a trust fund established. The only negative is that trust fund balance compared to the liability, it's
Not even a drop in the bucket.
Yeah.
It's not even.
Better than nothing.
Drop in the
it's
ocean.
better than nothing. However, because of the size of the trust, Easton is required by the accounting standards, as is so many communities in the Commonwealth, to use a far lower discount rate. Pensions using 7 3/4. The discount rate that you're using for your OPEB trust is 3 3/4%, and that's very much defined by the accounting standard that, if those assets are scheduled to deplete, and I think you don't even need much of an analysis to know that those assets would deplete fairly quickly if they were used for benefits, that the standard requires you to use it's a 20-year average municipal bond rate, and that was determined to be about 3.75%.
And that's actually down because the prior OPEB valuations used a slightly higher discount rate of, I think it was like 4% instead of but because of the new pronouncements, it
Yes.
changed the way the discount rate was calculated, and so it was reduced, which had a greater impact on what the liability was gonna be for that year too.
Back to page 12, maybe to conclude for a couple minutes. Again, the focus here is almost always on those two liabilities, the net pension liability and the net OPEB liability, collectively about $160 million in those two liabilities. And it's that $160 million in liabilities that's causing that second number up from the bottom, the unrestricted net position, to also be in negatives. As I think the committee knows, those liabilities goes up, net position or retained earnings goes down, and those combined liabilities of $160 million really are the two driving forces that make that unrestricted net position a negative. I'm often asked, does that mean if we didn't have those two liabilities, we'd have a positive $25 million? And yeah, that's exactly what it would mean. So.
What was that, what was the unrestricted number last year? I
It was
imagine it's gone up by about 75.
Yeah, it was a negative 62 million last year. So, any other questions? There's a wealth of footnotes on both pension and OPEB, and I can talk.
I got a quick question for Wendy, just on the asset side. Cash, short-term investments and investments at the end of the year is sitting at, about 32 million. What was it last year, do you know? And
Is that in the MD&A?
It's not. I have last year's statements right here. I believe the combined balance is up, but it's mostly driven. The combined balance last year was about $29 million.
Okay, we're now at 32.
Yeah, and a lot of that is driven, much of it can be timing. For example, in fiscal year 18, you issued, about $3.6 million in bonds. Without getting into too much detail, exactly when those were sold, and then in turn, when those proceeds were actually spent, that alone could result in the significant increase in the cash position as of the 6/30/17 to 6/30/18.
Okay. I just wanted to know if we were significantly down or up, but it's similar and up a little.
Yeah.
And that could be time. All right, thanks.
Exactly. So, I'm gonna skip over page 13. Page 13 is a very different looking statement of revenues and expenditures. If the committee would like, I can walk through it. It's structured very, very differently than what most readers of financial statements on how revenue and expenditures and results of operations are viewed. I can certainly walk the committee through that if you would like.
I had one question on that, because I think we did spend some time on this last time, and it related to revenues, and one of the reasons that we were in a better position than budget was, I think, some of the property tax revenues were up. How did we do this year versus budget?
Property tax?
We're-
That's-
Like excise property taxes.
Sure.
It was a nice pickup there, like the year before.
The best way, I think, to view that is over on page 18.
Okay. Then by all means, skip 13.
Page 18 is the budget and actual comparative schedule.
Okay.
And if it's okay, because this is where that last column of numbers shows the variances between the actual amounts and the budget. But if the committee doesn't mind, I'd like to go back to page 14 first, because what I want to try to do is to talk about fund balance and compare your unassigned fund balance this year to the prior year. And then we want to maybe add to that conversation about why did it change, or in this case, why did it basically stay the same? And that's where we're going to use page 18. If anyone's still looking at page 18,
I found my answer already,
Yeah.
so.
then I'll
On 18.
preview of coming attractions. The number in the lower right-hand corner of page 18 of 162,000. I mean, that's on a budget of 78 million is pretty narrow. That's why, and when we come back to unassigned fund balance, you're going to see that there's a slight increase in unassigned fund balance. It's not going to be $162,000, but it's this last column of numbers that will drive the change in your unassigned fund balance. Page 14, though, and I'll just walk through a couple of pages here. This is your governmental funds balance sheet, and the focus is almost always on that general fund column, which is the first column of numbers. And even more specifically, this is the first place that almost all readers will turn, is in the bottom left-hand corner there, the third number up from the bottom, the unassigned fund balance. As of June 30, 2018, it had an account balance of about $5.1 million. That's increased by about $240,000 over the prior year. Again, page 18, the budget and actual results was 162. That's really what's driving much of that change there. But I think what I'd like to point out on the general fund on page 14, I know I spoke about this last year after reviewing my notes from today. I think it's important that everyone understand that on page 14, that general fund column, there are really two components to that, to this column. They're separate in Wendy's general ledger, as required by the Uniform Municipal Accounting System used in the Commonwealth, but for formal presentation purposes, this general fund includes what Wendy considers her general fund plus your stabilization accounts. Stabilization accounts are sometimes referred to as rainy day funds. And since essentially those rainy day accounts originate from the general fund, accounting standards have you present them together. So what does that mean in terms of the unassigned fund balance? That unassigned fund balance of $5.1 million can be broken out into two pieces. And they're pretty well balanced in Easton. The true general fund portion that would tie back to Wendy's general ledger is about $2.9 million in unassigned fund balance. The general stabilization account, which is also a component of your unassigned fund balance, is about $2.2 million. So the 2.9 in the general fund and the 2.2 in this general stabilization combined to be that $5.1 million that you see on page 14. Now, comparing that 5.1 to the prior year, I mentioned earlier that there's an increase of about $240,000. And also, as the way financial institutions and rating agencies, they're going to look at that number as a percentage of your fiscal year expenditures. And that $5.1 million represents about 6.4% of your fiscal year 18 expenditures. Very consistent with the prior year, both in terms of dollars and in terms of percentage. Shows stability on the balance sheet, and we'll tie this back in with the budget versus actual page in a moment. Fairly break-even operating results for the year that we saw on page 18, and as a result, a modest increase in your unassigned fund balance from June 30, 17 to June 30, 18. Just by way of introducing or touching base again on the numbers above the unassigned fund balance, June 30, 18, about assigned fund balance of about $1.9 million. That's essentially unchanged from the prior year. And above that is your committed fund balance of about $2.5 million. That also is unchanged from the prior year. And for the most part, the assigned fund balance of $1.9 million, the largest piece of that is fund balance, or more specifically, free cash, certified free cash, that is used for the fiscal year 19 operating budget or capital budget. Thank you. As soon as I said operating budget, I knew
Oh, some of that's operating.
used for the FY19 budget is probably the way I should have articulated. Thank you.
I'll have some questions when we get to 18, believe me.
Okay. And then the committed fund balance of about $2.5 million, which also, again, is nearly unchanged from the prior year. There's some non-lapsing capital appropriations in there, as well as the town's capital stabilization. Since there's a purpose established with that portion of your overall stabilization fund, that portion is shown as a committed fund balance. So again, just in summary, the three key numbers here: the unassigned fund balance, the assigned, and the committed fund balance. In almost all cases, there's very little change from the prior year, again showing some stability in the balance sheet. Two other things I have circled on page 14 that I just want to make sure I speak about, and then we'll go over to page 18 and look at the budget and actual comparative schedule. But on page 14, that second to the last column of numbers, the non-major governmental fund column, again, the focus, I just want to point out the third number up from the bottom. It's in parentheses of $2.4 million. That is just a timing issue. If you look a little bit further up from the bottom, you see notes payable of about $2,537,000. When those short-term bond anticipation notes are ultimately sold in the form of a long-term bond, it will fund or finance the negative amount in the unassigned fund balance. It's not as if those projects are over budget by $2.4 million. It's just really a timing issue on when those bond anticipation notes are actually sold as permanent financing.
And where do we see that, Wendy? Where do we see that show up in the interval between now and the next time we see Scott? We see that in reports that we get on
Yes.
FinCom?
Yes. You're gonna see the capital projects in the section of the reports that are the revolving funds, grants and gifts. Because it's a separate fund outside of the general fund, it's not like a budgeted fund. So you're gonna see, in funds, the range is like the 30s and the 40s for the fund numbers. Those are gonna be your capital projects. So anything that we borrow for, like the capital purchases, the road bond money, school capital projects, anything like that are gonna show up in those funds, all the borrowed money. And you'll see them, and it'll look like there's a deficit balance, and that is because there's also a corresponding note that you don't see because you just see the, kind of like the fund balance activity. And note proceeds are a liability, so they don't flow through that fund balance, that bottom line, until they become bond proceeds.
Thank you.
Other questions on the governmental fund balance sheet before I hop over to the budget and actual comparative schedule? Great. You know, the pages I'm skipping over, page 15 and 17, just so the committee knows, they are designed to show reconciliation between a long-term perspective balance sheet or full accrual financial statements and your fund basis statements on the modified accrual. There's a lot of good information in there. Page 16 is your overall statement of revenues and expenditures. But again, the page that probably gets as much attention in any report of governmental financial statements is, in your case, it's page 18. It's the general fund statement of revenues and expenditures and a budget and actual comparative.
Before we get started, on 18, I have a question for Wendy. We have an original budget and a final budget. What's the original budget, and is final budget what town meeting approves?
So the original budget is what would have been appropriated originally at the annual town meeting, but then you also have a special town meeting before you set the tax rate, and any additional appropriations from that special town meeting would be
Okay.
added to this.
So that's the difference, is a
And
special town
That's
meeting.
typically the difference.
In this
yeah.
case, you know, you can see the numbers stick out, and that's what it is.
So
It's
it
the
would-
725,000, is that what a special town meeting, since that's the delta on the total expenditures? 'Cause you went
The
from s-
725 that's just the variance between the final budget and the actual?
Oh, right, not the budget, so it's the 77.3 to 78.2,
Yes.
which is really it's still about the same, about 800.
Yeah, so I mean, and if you look at like some of these individual line items, you'll see like the finance committee went from 1,500 to 2,100. We did have a supplemental appropriation,
Is that the pizza party you're burning?
a supplemental appropriation. Actually, there's several opportunities to adjust this budget. So
Yeah.
you've got your first shot, which is the annual town meeting.
Okay.
Then you'd have like a subsequent fall town meeting during the year. But then at the annual town meeting, you could still supplement your budget in that fiscal year. I think that's probably when we did the one for the finance committee. Then you also have, if you have any reserve fund transfers at the finance committee votes, that would be reflected in your final budget. And also, I think we've only done this once, but at the end of the year, if it's after town meeting and you have an issue with appropriations, you can make, with the approval of the finance committee and the board of selectmen, you can do that year-end transfer between departments. So that would be reflected in there as well. I think we did have to do that, I don't know if it was last year or the year before. We had a lot of legal bills. I think it was the year before last. We had to make that transfer. That was the only time we've ever done that.
I mean, on this page 18, there's 4 6-figure spreads here. So, you know, Wendy, I would ask you to address them, but I didn't mean to. You go ahead, and then I'd like to talk about those.
As I was listening, you know, I wanted to just take there's a roughly a $900,000 increase in the budget, and if you want to make a note, at the top of page 10 of your MD&A is a nice little write-up about what those just under 900,000. But the largest of them is in your transfers out of about 600,000, and there was a supplemental appropriation for which free cash was used, and that money was transferred out of unassigned fund balance into your stabilization account.
Yeah, that was,
That's
the
600,000
transfer that
is
we
the
made.
lion's share of the overall change in the bottom line appropriation.
That's that 25% of free cash that we now do in accordance with the financial management guidelines. So whatever's certified for free cash, we take 25% of that, and we put it into stabilization.
Okay.
The focus on page 18 is almost always in that last column of numbers. I'm going to start at the top for a minute and just go to the first subtotal that you see, the total revenues and transfers in. Came in greater than anticipated by about $785,000. So, good results of operation. It should be pointed out that a year ago, that number was about, June 30, 17, that number was about $1.3 million. So it's dropped back about $500,000. And that drop of about $500,000 is very much related to building permits and related other permits that didn't come in FY18 at the same level that FY17 did, and much of the reason for that is the Avalon project and the permits associated with that were recognized in 17 and weren't present in FY18.
And just to note, because I remember this discussion from last time, is that it looks like we've been underestimating the vehicle excise taxes the last couple, and that's always a good cushion. Is there any
Yes.
rule of thumb on how we budget that, or you just go flat and then whatever happens, because it can go plus or minus depending
Yeah,
on
I'm-
the economy, right? If it's a bad economy, no one's buying cars, right?
Right, it's a balancing act as part of the budgeting process as a whole. When we look at local receipts, we don't just necessarily look at, we have to balance the need to fund services, but also the need to be conservative so
Yeah.
that we will generate the free cash that we're gonna need the following year, because we do have to rely on free cash to fund that structural revenue deficit.
Mm-hmm.
So it's a balancing act,
Yeah,
we,
I get it.
we try to keep it as level as we can, but a lot of times sometimes we bump it up a little bit.
So, I would probably think the same about fines and forfeitures as well. That's a huge doubling of what we'd expect, and I don't know if that's a good thing or a bad thing, that we have to fine and, have, residents forfeit.
Well,
assets.
actually, there's a lot of things that go into that, though. One of the things that's in there are penalties and interest on overdue taxes, so that's.
Yeah. Yeah,
That's a good part of it as well. So, and especially like if you have payments on, people make tax title payments, a good portion of that is gonna be interest, that's gonna be included in that number also.
yeah, and other revenue that went up, and what's in there?
There's a lot of different things in that category, that's sort of a, kind of a catch-all.
Yeah, so, I mean, my read on this is that, our revenues were about 785 higher, and as coincidence may happen, that's just about what special town meeting appropriated for the extra stuff. So it's a balance. And I'm thinking that this before special town meeting on what the town, based on these numbers, and what the town can afford at special town meeting to get the extras and the capital purchases or whatever. Because it's really non-recurring revenue. It's
Right.
nice little extra that you say, okay, we got this, free cash is a little higher, so that's what we'll do. Is that the way this kind of works?
Well, yeah, because when we have the special town meeting in the fall, the
Yeah.
results of like this particular year,
You'll kind of know this.
we know this because the
Yes.
free cash has been certified
As
as
June
of July,
30th.
as of July 1st,
July-
which is
right,
really the
yes.
June 30 year end
Yeah,
from
yeah.
this fiscal year.
So this is really what you kind of go on, when you see what we can do for capital.
Right,
Capital
right. We,
expenditures for the
we look
town.
at, you know, what has been certified for free cash.
Yep.
Do we have any other, you know, types of reserves laying around, and how much can we afford to borrow?
Okay.
What's the detail on some of the reductions in, where we came in under budget? So it looks like employee benefits and the police department.
The police department did have some vacancies during the year, so that did account for a large amount of that variance.
And have they filled them?
I think they still have some vacancies. Yeah, the civil service process is, it makes it hard to fill positions quickly.
Yeah. And
Employee benefits and insurance, that is such a large budget
Yeah.
that we always have to make sure we have a fair
More than enough.
cushion in there.
yeah, that's a small percentage. So even though it's the largest amount, it is a small percentage, and I guess that.
Yeah, because I mean, all the health insurance is in there.
And if one is up, like if police department is a favorable, like less, then, you know, you're obviously gonna have less associated benefits with it.
out for,
Right, I mean, not that high, but it still has some impact there, like some of it, so, okay. And the,
We were just talking about some of the expenditure categories, in about 2/3 of the way down the page, you see the total expenditures and transfers out in that last column of about $725,000. That number is very, very consistent with the prior year,
yeah,
as a whole. Now, the combination of the excess revenues of 785 and the unspent appropriations of 725 give you the next number down, 1,509,762. That's just a combination of the revenue surplus and the unspent appropriations. Now, there's some numbers in parentheses indicating that it's a use of surplus before we get to the bottom line in the lower right-hand corner. First one we come across is the use of free cash for the operating budget of $1,500,000 or $1,600,000. That's the use of free cash which is a component of your unassigned fund balance to balance the budget for fiscal year 18. So that's not new money coming into the treasury here in Easton. So that's drawing on savings accounts, so you would expect that would have a draw on your unassigned fund balance. The other numbers there are pretty small. I can speak about them if the committee would like, but in general, the positive results between the revenues and expenditures of $1,509,000 are softened by the use of free cash for the operating budget of almost $1,600,000. And then there are those other lines, again, if the committee would like, I can speak about them. But that's how you get from the positive $1,509,000 down to only the $162,000, which is sort of the bottom line change, if you will, as a result of fiscal year 18.
can you explain raised prior year deficits?
Yes.
No, that's a plus.
That's a
So,
plus. In fiscal year 17, much like you did in FY 18, you had a snow and ice deficit. And as required by the general laws of the Commonwealth, you need to raise that deficit in the prior year. So you're basically raising money to pay to fund
Last
the
year.
outflows of dollars that occurred in FY 17. So that would have a positive effect on the bottom line.
Because we had to fund less in 18 than 17?
No,
mean,
you
it's-
had to raise revenue in 18
Oh, the
to
revenue.
cover expenditures that were incurred in 17.
So that's really revenue? I
Yes.
get it. Okay.
No,
No, not revenue. Mm-mm.
Well, if it's an
Does
expense, then why is it?
does
it's
it
the,
come out of the
the
levy?
variance looks that way, but if you look at on a budgetary basis,
It's coming out.
it's
yeah.
coming out like a use, and that's
Yeah.
because you're basically taking money that you raised from the tax levy,
For the prior
and it's
year.
coming off the top to basically fund that prior year snow and ice deficit, and that was the third year that was amortized from that really bad year that we had.
Yeah.
That
Oh,
was
that's
the last year
amortized.
of that.
I,
Yeah,
I,
they let us amortize it
you
that year
amortize
because it was
that
an
year.
exceptional year.
yeah, no, I haven't been on FinCom in like well over a decade. And I just thought it was, you go 1 year to the next.
Usually
and
you
1 year
do.
you go back to the prior year.
Yeah, typically you would do that, but
This is this is amortization.
we had like almost $1 million deficit, and we weren't the only one. This was like statewide. So that's why they let us amortize it over 3 years instead.
Okay. Hopefully next year won't be as bad. So that actually took away, and that's what got us down to the 162, as it turns out, of net that we're putting in over, you know. So it was a pretty close, even Steven type of year.
And that's why I know I said it earlier, even before we got on to discussion of the general fund balance and more specifically the unassigned fund balance. It's this net number here of 162 that's the driving factor of why your unassigned fund balance went up 240,000. It's a little bit, it's far more complicated than that. There's all sorts of reconciliations in the notes. It does make my job easier when the number here on page 18, comes pretty close to the driving, the amount that the unassigned fund balance increases. And it usually does, because that makes sense.
Yeah.
There are situations when that's not going to be the case. And it's usually explainable. But again, it makes my job easier when
It's close to zero.
Yeah. That's a very, very quick walkthrough of, I tried to touch base a little bit on the long-term perspective. Again, those two big liabilities, the general fund, your general fund balance sheet is very, very consistent with the prior year, showing some good stability there. In page 18, I think there's a wealth of information here that can lead you to conclude that pretty much FY18 was a break-even year with little changes to the bottom line, and it's this 162 that we see here that is most of the overall increase in the unassigned fund balance. It was not my intention to walk through footnote disclosures or any of the what we call RSI, required supplementary information. There's a wealth of that. It all deals, it doesn't all, let me rephrase that. Most of it deals with the two liabilities that we've spoken about, the net pension liability and your net OPEB liability. I will take direction from the committee. If there's a desire to get into any of that level of detail, I'll be more than happy to do so. We did issue we have drafted an issue to Wendy that I understand has come to the committee, a management letter. It's really just a couple of comments in there. I think, again, it goes to the fact that FY18 was a very timely close. We found the books and records to be in good order. In your management letter, beginning on page 3, and I don't mean to skip over page 1 and 2, there's probably a lot of good reading on there. It will tell you that none of these issues are considered material weaknesses, which I know we have some at least from the public accounting profession would know that term. But even if you don't know that term technically, the term probably scares a lot of people. If you have a material weakness, it's probably not a good thing, and it is not. You do not. You do not. But just to recap a couple of issues from the prior year that still we would like to see the town address is to prepare for some single audit changes. In the prior year, we had recommended you do this by additional staff training to ensure compliance with uniform guidance. Uniform guidance is a term, as a recipient in an entity that expends federal grants, you are required to follow OMB guidance, and it's generally referred to as uniform guidance. Your policies and procedures are, to comply with uniform guidance are still being developed, so we don't look at this issue as having been resolved in fiscal year 18. So we continue to recommend that you enhance your existing policies and procedures to conform with all of the uniform guidance requirements. At the bottom of page 3 is to evaluate the indirect cost allocation. Indirect cost, you would go between, your water fund in particular, and the general fund, where the benefits are actually budgeted for in the general fund, but there's an accounting of the allocation of which costs go back to the water fund. Those amounts haven't changed over the last couple of years. Yet, of course, salaries and benefit level costs have changed as well. So we'd like to encourage the town to reevaluate that indirect cost and at least update it at least every 2 years to make sure you're capturing all of the necessary costs to have things fairly allocated. And at the top of page 4 is to prepare for one of the newest GASBs, GASB 84, deals with fiduciary activities. There's a lot of chatter in the audit world and accounting world with respect to governmental entities that 84, statement 84 is a little bit of a sleeper statement, if you will. That it, on the surface, it doesn't seem like it's all that involved, but there should be an implementation guide that's due out any day or week now, I would say, although it was scheduled to come out in December and it's still not out. I would encourage the town, Wendy in particular, to get it. It really could change the way some of the accounting for fiduciary funds, agency funds, student activity funds, and things like that would need to be accounted for, one, in your general ledger, and two, presented in the formal financial statements. So it's not applicable until fiscal year 2020, so it wouldn't be a financial statement reporting requirement until June 30, 2020. But we look at this as an informational comment, so that you don't want to be right at June 30, 2020 and looking at the implementation guide, because it's possible there's some prep work to be done to implement this standard. So that's a really, really fast walkthrough of our audit of Easton's financial statements, your financial statements for the year ended June 30, 2018. And I guess I'd conclude by saying this before I started with, I just think it's great to be here, before the end of January and giving the committee an update on the audit process and your balance sheets and statement of revenues and expenditures in a timely fashion, and probably as timely as it's been in several years. So congratulations to the town for that.
Thank you.
Thanks Scott, thanks Wendy.
Thank you.
Okay. Any other questions for Scott, or while we have him? Because we won't see him for another year.
I have a question, I think it's a procedural or process question. For example, the management letter from last year, do we see the management response to that? Or I see that you've resolved them, right, so they don't show up again here for 18. But your response or the town's response to the recommendations,
I can get those for you.
that would be terrific. And then what will be your process now responding to these recommendations, or the timeliness, like for these policies and procedures and for implementation of the new standard?
So for the implementation of the new standard, for that new comment, I mean, we'll work with Melanson Heath
Absolutely.
to make sure that gets taken care of. The indirect cost allocation, we do have a draft of basically kind of like an allocation plan, a methodology. It's under review right now, and we will be bringing that forward to the selectmen for their approval, and that'll be the basis that we use every year to determine the indirect costs. And we're gonna be working on finalizing the changes for the single audit as well.
Anyone else? Thanks, Scott.
Okay.
Appreciate it.
Thank you.
Thank you, and congratulations, Wendy.
Yep.
Thank you.
Good job.
Thank you.
All right. Must feel good to have this done.
Feels really good.
Yeah, because the other one, we just saw the draft 4 months ago.
Yeah.
And this is great. Yeah.
But there was a reason for the delay last year. I mean, it
Was
was
the
the
OPEB.
actuarial,
It
it
was
was
the
the
OPEB.
OPEB.
It was the
all that.
actuarial evaluation.
Yes.
You only have to do that every other year.
Yeah.
So this was a year we didn't have to do it, but we're not gonna be in that position next time around. We're gonna start working on getting the information together for the actuary. It's getting the information together for the actuary that's time consuming.
Yeah.
We just don't have a lot of extra staff to do it, and kind of always gets pushed to the side, but this is a top priority. We're gonna work on it in June, and we'll engage the actuary to get it done. And he can turn it around very quickly.
How many people work in your department?
I have, in accounting, I have 2. As finance director, I mean, I'm over, treasure collector and assessing, but in terms of the accounting,
Accounting functions.
it's me, my assistant, and a clerk.
That's not a lot for a lot of things going on. How are the systems?
The systems are okay, you know, the financial accounting software that we have.
Yeah, how
You know,
how new is that?
We first got that for fiscal 10. So, you know, we've had it for a while now. So we're going on, 10 years. It hasn't changed a lot. The company has been sold to another company. They own several companies now. They bought a competitor. They bought KVS, so we have SoftWrite. SoftWrite was bought by Acela. Acela also owns Springbrook, which is another form of financial accounting software. Doesn't really translate well to municipalities though, because they don't have a property tax module. They pretty much have, I think, everything else except for property tax module. Then they also bought KVS. KVS is municipal software. We actually looked at them when we were moving from our own in-house system to getting a software
I remember that
vendor.
one. That's when was it Mike Deltano was writing patches, or someone was writing
Yeah.
patch, and only one person knew
Yeah,
about how to use it. And if
Right.
that person ever got hit by a bus, we would have been dead.
yeah,
This is, I swear to God, I remember those days. So,
yes.
but
Yeah.
this system is pretty good. But you're thinking about
It,
moving, or
it meets our needs right now, but it runs on kind of an old, outdated platform. It's
Yeah.
written in Fox Pro,
yeah.
so
How much would
that's-
it cost to update that? Because 9 years is a long time for using the.
well, the problem is, if you really want something more that's updated,
Yeah.
really the only other competitor that's really out there that a lot of municipalities use is Munis.
Yeah.
Munis is extremely expensive. I mean, it would probably cost us to convert. Communities have paid like $500,000. I mean, it's
And you'd lose your summer.
It's
You'd
crazy.
lose your summer.
How could
during
we do
conversion, too.
that? How can we justify that?
Yeah,
You know,
No. Okay.
we're
right.
borrowing to pave roads. You know, I can't
Yeah,
imagine.
I get it.
$500,000 for accounting software.
Yeah. Okay.
So I mean, we're gonna have to stick with what we have, and unless something else comes along that's more reasonably priced.
Yeah.
But it's kind of a limited market.
Mm.
There's only so many vendors out there. So they are looking at transitioning, because I guess they've made some changes to KVS. We didn't really care for KVS as much when we were evaluating the softwares,
Mhm.
because their payroll modules, we do payroll in-house, it looked really old, and
Is it
like it
really-
hadn't been updated. It reminded us of what we had.
Is it risky to do payroll in house?
I think it would be risky if you had an outside vendor preparing it for you when you decided, hey, let's bring it in-house. I would never advise doing that. Once it's out, never bring it back in.
Right.
But I think that we have a good handle on it. I don't think it's a problem. I mean, we make the deposits,
Just so many employees, so much reporting.
Mhm.
I mean, these W-2s look insane every year, just looking at mine, taxable, untaxable benefits, depending on, if you're management or not, and getting them right. And, I don't know. I mean, I know private companies, the penalties just for making simple mistakes are $270 on each side, so it's $540. I don't know if towns have to pay penalties, but I do know that, he said you have 3 people, including you, doing payroll. I mean, generally payroll is one job.
Yeah,
right?
payroll is a little bit different though, because payroll is, it's partly decentralized. It's also the school department, they do their own payroll, so they have
They have their own payroll
staff
person?
over there to do payroll.
Okay.
We have a person in the treasurer's office that's the payroll coordinator there.
Mhm.
The treasurer's involved. Administration of benefits is also sort of, spread out to other people.
Does it ever
So-
make sense to combine payroll into one department for the town, or now?
I think it would be hard. I do think the school
Yeah.
department, they have their own needs, which are can be different from the town.
Sure.
And then the town has different unions and different ways of being paid. The
Sure,
school
and they-
department is on a bi-weekly payroll,
Okay.
and all the other town is weekly.
Yeah. Okay. All right, thanks. I appreciate it.
Sure.
All right.
Just looking back at the old minutes as we're preparing to get ready to review them, we did talk about a review of the student activity funds needing to be done every
Mhm.
other year. Was
Yes.
that part of,
I'm sorry, I missed that on here. Go ahead.
that's okay, was that something that we should be
That,
expecting, or?
yes, yes, that is a separate report. That it's a separate report from the audited financial statements.
Mhm.
And they were at the school department, I think, wrapping up the single audit. They are going to be doing the student activity audit very soon. And so depending on if there is anything in there, with that management letter, it is a draft, there could potentially be other comments. I'm not saying that there will be, but that piece of it has not
We
yet
can-
been completed.
Sure, we can get that on our next, on our next agenda. Okay. Yeah, I did wanna just put the minutes to bed. There has been some people in town, I suppose, on social media questioning our minutes, and I'll always say, if anyone watching this, if you really want something better than minutes, just watch a tape, if you can stay awake. But in any case, we've got the month of June minutes and the October minutes.
And
So-
September,
In September,
yeah,
so
there's
let's,
3
let's,
sets, and
let's vote on everything.
makes us current.
Yeah, and before we get to that, I think it's important, because I did wanna get all the minutes, make sure they're recorded, because, we are gonna be meeting with the selectmen, which is what we wanted to do after the annual audit, and putting the operation audit to bed as well, to meet with them, just to give them an update on what's going on, and it's great that Chuck's here as well, so. I think that's February 11th, and
February,
you'll be
yep.
there?
Yes.
Thank you. Okay. Wanna go to June first, the June one?
Yep, so we can go to June. Actually, when I was watching the tape, I did notice, I wanted to just make a note. I noticed that, there was a correction to one of the minutes, and when I gave the minutes to the town clerk's office to be posted, that correction wasn't in there. I did since fix
Amended.
that.
I saw
And
that,
amended,
that they were
so-
amended and
Yes.
posted, I saw
Okay,
that,
thanks.
thank you, Wendy.
Do we have copies, or I don't?
Oh, did I pass those out?
You know, I
June.
I have June.
okay, I didn't get them for.
I made copies of June. I thought I passed them out. No?
Okay.
I have June, and I have the other one because I printed it out.
Does everybody have June?
Yes.
I have June's.
Okay. Just to go over, it looks like we're still hitting the operational audit, report, pretty much for that entire meeting. Any motion to accept the minutes?
Make a motion.
I'll second.
Okay, all in favor? Unanimous, thank you.
Do you want to look at the October one?
September 1st, do we have?
This is October 25th.
Okay.
I didn't see it.
Do we have September?
Oh, we do have September, which I can print. I can make copies.
Yeah, if you could,
Okay, why don't,
yeah.
you can do October if you want, while,
Yeah,
This is the revised one, right?
yes.
Mhm.
Correct.
This is one that Caroline attended, so
Aren't the minutes beautiful?
They're very good.
they're detailed, thank you.
Is it too detailed?
No, it's fine,
Thank you.
it's fine, that's what we want. That we get no questions, so, okay, and this ties to, this minus 91, 998, ties to my latest spreadsheet. So that's good.
I'd make a motion to approve these minutes.
Okay, I'll second it.
All in favor? Unanimous?
And those are the October 25th minutes that are approved.
We'll go September. And then we're gonna move to school parking,
So
and then.
What? operational,
Yep, so where are we on
session
here?
to vote and finalize.
Operational audit, that will be last.
Okay,
Since,
so it's gonna be last.
So right now, we're reviewing,
Right,
then
minutes.
we'll hit that.
Okay.
And, okay, and new business, we already have that student activity fund we wanna look at
Mhm.
for next meeting. And it should be after the elections. Chuck, you're not up this year, are you?
No,
Okay, so hopefully you'll still be another
Yeah.
year here,
Yeah.
okay. I'm up in June, but you have to run. Hopefully unopposed. Don't put that.
Whatever it is.
That shouldn't be in any minutes
Thank
or,
you.
but it's already on video.
thank you.
Thank you.
Thanks.
So this was the last time Scott was here in September. Almost 4 months to the day. Anybody want to bring up a motion
Oh.
to accept?
Make a motion to accept
Second.
the September minutes.
Second it? Nancy seconded. All in favor?
I abstain.
Right, you missed the meeting, so, 4-0, 1 abstention. Thanks, so. And I believe after these get filed, please, if you can do it before February 11th, it'll be up to date, and, up till this meeting, where Roseanne will work on the minutes as well. Thanks. And, okay, so, next item on the agenda, and we will go to reference the October minutes, because that's when we last had a major discussion on it. And this was this and the operating audit, one of our open items. Again, this was not on the audit, but I guess we had noted originally that several towns around us had student parking fees, and we did not. Caroline spoke about it, and she said they looked at it, they can look at it again. However, part of the problem was monitoring.
Right.
So Nancy, for those who can't see it on TV, put together an excellent spreadsheet.
This is great, thank
It
you.
lists parking fee, amount charged, number of spaces, sticker or placard, how it gets monitored, whether there's a bus charge in the town, and the amount of the parking. And it's an exhaustive job. Again, thank you. I'm assuming you did this all yourself?
It wasn't that hard, really.
Did you have to make some
But
phone calls, or?
Made some phone calls, did some
Okay,
internet work.
okay.
But I think you'll notice that towns that do charge a parking fee also have a bus fee. So for example, Canton, bus fees, everybody grade 7 to 12 that takes a bus pays $250 to take the bus. And if they park their car, they pay $200. And you'll notice that.
Can't you have 250 actually?
Canton,
Yeah,
Yeah.
250.
250 for the bus charge.
Oh, for the bus,
Oh, that's the
but for
bus
the
charge.
parking
Oh, the
charge
parking's
is
200.
200.
I gotcha.
And you'll notice in all the places that do have parking, except for Mansfield, they're like on the honor system. Previously, Mansfield, let's see, Mansfield had a monitor that was a lunch and recess aide and a duty person, and they would come over and check the parking lot. Well, that person has since retired. nobody's taken their place, so nobody's really monitoring in Mansfield. And I don't know, the woman that I spoke with, she goes, it's a little bit of a problem this year, because kids are just parking, and because they know nobody's watching it, so it's interesting. But you'll see that all the other monitors are already, like an assistant principal, the Canton that was principal, vice principal, and the SRO, which a couple towns have, like Sharon, the parking spots belong to the town. They're not school property. They're across the street, and they belong to, so the DPW that's one of their lots or something. So that money doesn't even go into the Sharon schools. It goes back into the town through the police department, I believe, or the
Okay.
DPW department.
So if we were to complete Easton on here,
Yeah.
first column,
It would be no.
zero. How many spaces do we have?
300.
Would they be 300 that could
Could be used.
be used for students?
Yeah.
And,
And,
and the
not all
bus
that
bus
space.
charge is a no, correct?
bus charges, we do charge a fee for students under 2 miles that
All right.
want to get a bus.
But generally no. Those
Generally, no.
Okay.
Yeah. And some of these are, for example, who is it? North Attleboro, if you decide to take a bus that's less than 2 miles, you pay that fee. So not everybody pays the $200, just, North Attleboro, yeah, just the ones that are less than 2 miles.
So we have neither bus charges nor parking fees.
Mm-hmm.
Which is, we're like a lot.
So taxpayers is sucking that up on both sides.
So these bus charges, people will have to pay that?
Right, so for example, let's
Regardless?
go back to Canton, it's $250 for every kid in 7 through 12 that takes a bus.
So is it only K through 6 where it's mandated if you're 2 miles or more by the
Right.
state?
Right,
Okay. But we extend that to 7 to 12.
right, but I don't know.
So this is interesting. I mean, obviously Foxborough has the Patriots money, and so they're not going to charge anyone a dime for anything.
So let's just build a stadium.
Brockton's-
Is that what you're saying?
And Brockton's got a lot of funding. Well, yeah.
Did
we
we
have
figure
no
out how
choice.
many spaces we do have?
We do
just
have
said
about 300.
300.
I
300
think that's what they
spaces.
told me
Does
last
that
time.
include the dirt lot stuff on the
No,
side?
no, right, that's just the 2 lots.
Oh, it's not the dirt word. I
It's
like
not
to
the
park 'cause
dirt,
I can get
yeah.
out easier
Yeah.
from a town
Yeah.
meeting.
And I think it was Mansfield that they had like 10 extra spaces than what they sold permits for, because they allow, that would be like their snow area.
Oh, okay.
So I think kids still park in there,
Mhm.
but they're not like permitted. Some of the towns, they put there was one town, they put numbers on the lots, like on the spaces, like
Oh,
MBTA.
okay.
Sign spaces.
Yeah.
So they didn't have placards or permit, they had, I forget
Yeah.
which one that was.
Yeah, so what was the last discussion, and I haven't seen or read minutes, and maybe to my own detriment, about the school committee?
Like a school?
Yeah, you
So
know,
we
in
we
between when they say F. Berkowitz, what's he doing here? What's he doing to us, right?
But I mean, we talked about parking last year as we were going through our budget process, and we'll talk about it again this year.
Okay.
But I think if we do bring in parking permit, we also have to talk about bus fees.
And why?
Because I believe one of the reasoning was that if you start having to pay for parking, maybe the parents would say, well, you're gonna take the bus because it's free.
I don't think
You know
so.
But if
I
they
don't
did,
know.
that's not a bad thing. It would,
True.
it would be
It would kinda
environmentally
make-
friendlier,
right.
it would
I know,
cut
trust
down on
me.
the traffic
But-
up there.
Yeah.
But these kids with the cars,
I
the
know.
parents, you know, look, I don't want to make generalizations, and you have no choice but to put this in the minutes, but I'll say it anyway. I mean, these aren't, you know, let's face reality here, and the kids who have their own cars aren't going to be taking buses. So I don't see why that can't be separated.
I mean-
and, you know, and I also have no problem with an honor system whatsoever, so that there's no cost. And these people are generally more well off. And look, if they're going to be sneaky and not pay, you know, what are we going to do? I mean, and I also think some of these fees are fairly high. I mean, I would say go lower.
So
You
what
know?
are you recommending as a?
I'm not gonna recommend, but I wouldn't even mind if we, if they just got, $100, not even $1 a day, because I think they'll pay it.
Yeah, so the average is 110, the median's 122.
And the low is
25.
25,
And that's for a half a year, and was that Stoughton?
and that's honor system, Norton.
Norton.
Oh, Norton, yeah, and that is
Marshfield,
just for the
Marshfield.
second half of the year.
And Stoughton is 60, right.
Right. And then, what did I put? Yeah, that was, Marshfield was a second semester charge.
Wait, so you can park free during first semester?
No.
Or,
But
That's just where they presented it.
yeah, when he goes, you can find all this information on our website, but it's so much easier
Nah.
to talk to a
Yeah.
person
Just
and
tell
ask.
us, yeah.
And when you go to the website, they said, oh, here's our letter, $25 for the second semester, and it was just like, well, what'd you pay the first semester? And I couldn't find it, and the guy was kinda,
So if you have 300 spots and you get, even if you get 250 people to give $100 and it's on the honor system, you're bringing in 25,000. I brought it up before that, the towns really has to go out of pocket on the field turf on the fields, and I realized, and Caroline made the point that, just because you raise this money doesn't mean it has to go there. Of course it doesn't have to go there. But, cash is fungible no matter what it is. But it would make a nice dent in, for the football field, and I think it's, it's responsible, and I don't think, as a committee, that if we didn't consider something, even on an honor system, and that the school committee didn't, then I just think it's a little silly, because there is wear and tear, and these kids are, just free parking for the day. I'd love to get that anywhere, so. I don't think it's such a bad.
one town, I forget, I think it might have been Mansfield, but they have a senior lot in first come, first serve, and then there's a lot down the street that the kids have to walk back from, and that's the junior lot, junior drivers. And they have a lottery and all that, or there's towns that do lotteries and whatever,
We have
so,
enough spots though, right? And I mean, it would be honor system, and they could wind up on the
on the dirt.
on the dirt, and
So do you charge for the dirt?
yeah, sure.
Okay,
it's a
so it
little
would be
spot.
$100 no matter where you parked,
Yeah,
okay.
yeah,
Because it wouldn't be assigned.
right. No,
It's
no,
just-
no
you
assigned.
just get the,
Yeah, I mean, I think the school committee and Caroline's big objections and the reason for showing up is how do you do something like this? Well, you do the honor system. If a kid has to really sneak and the parents really aren't going to pay, then fine. I mean, I don't think.
I'll
I
bring it to the
think
committee.
I think most people are fairly honest.
Mm.
I
Although the parent's gonna be like, oh, another fee, I mean, they're already paying for music and
well,
for
I think
athletics and.
yeah, I get it, but these are parents who can afford to
Well,
have kids with cars and use, town, school, whatever, whoever owns the property, that parking, and it's less than $1 a day, and, if they don't want their kid to have it, fine. If they wanna sneak and not pay, there's not much we can do, I think
so
most
there
people.
wouldn't be the cost of hiring a monitor
And-
or having somebody add another job to their job.
Right, and it's honor system. If they think that's unfair that some kids won't pay, well, people can cheat anywhere, and at some point, you gotta rely on honesty of people, and, I'd be willing to do that. I would hope the school committee would as well, so.
Okay, I'll bring it up at our next meeting.
Sure, let's bring up, I just wanna make sure everyone agrees, so I'll bring up a motion to recommend, an honor system parking for the schools at a low fee of $100.
Okay.
In the hopes of raising $25,000 at 250 spots. Still first come, first serve, same rules, so.
I would pull out the honor system part in what I would like to
Just 'cause not
support as
include
a
it.
recommendation, not include
Not
it.
include that.
And then the school,
take it.
or they could
Mr. Paul,
spot check if they wanted to.
They could
and-
have their own decide what their enforcement would look like in a budget neutral way, or maybe even a way I had suggested in prior meetings, maybe a student council or some, group could issue tickets. You get fined if you don't have your decal or whatever it is, and that group collects money for,
Sure.
towards prom, towards, I don't care, but
Are you
whatever.
yeah,
indicating-
it doesn't have to be checked every
Are you
day.
indicating
Sure.
less
Yeah,
confidence in the honor system like I have?
No, I believe that all
I-
people are good.
you
It
know,
may be, but
here's why I like the honor system. I just think, especially when you're starting something out, I mean, I think for the most part, I think people would see a value in this. And most people wouldn't object. But maybe I'm wrong. So I'm willing to accept the amendment to my motion, and then we strike that language. And
strike that language, but to add, what again, Roberta?
Oh, I wouldn't add anything.
It's up to them.
I would leave
All
it up to the
Brains would have
discretion of
governance
all.
over the monitoring.
Yeah.
Yeah.
The people at All Brains would have governance over the monitoring.
Roseanne, do you have this? So, my motion is to recommend to the school committee $100 charge for student parking for the year. First come, first serve on spaces. Sticker, placard, whatever is most economically expedient thing for the school to do. Even a cardboard put inside that says, like a beach pass. or something.
I still think it's too much detail.
Too much words.
I think the recommendation could be limited to,
To
we
$100
recommend
for parking.
$100 for student
$100
parking
student
at
fee
all
parking.
Brains.
And Nancy, you can give the other what we talked
Sure.
about. Okay.
That's good.
And I'm sure it'll have a lot of angry
Seniors.
Easton parents in our case, but
Well,
I just think it's
Don't sign
expedient.
up for Facebook tonight.
yeah.
No, yeah,
He's watching.
since it's funny, since I get on this committee, I've tried to withdraw even from reading anything related to the town, which is why I don't have to hear all the complaints. So. Other people tell me about it, so, okay. Thanks. So, all in favor? All in favor of the motion? Unanimous? Thanks.
Did you get a second?
Oh, any second on the motion?
I'll second it.
Thanks. Thank
You're
you.
welcome.
Okay. Okay. And again, this is, has this gone to the,
Yeah,
and you'll,
you're the first to see it. I'll share it with them.
yeah, you can email it out or do whatever
Maybe
you
I'll
need to
find
do.
some more towns,
Okay.
you know.
No, I think that's great. I think it's excellent. Okay. Geez, we're almost done.
Next meeting, I think.
No, we gotta do the, finalize the operational audit, because I do wanna bring this to the meeting with the selectmen. And we do need to set a meeting, but
Are we gonna discuss the audit contract?
let's do that. Let's discuss the audit contract. We did discuss it last time on, First of all-
We're looking for 3% increase, right, instead of.
That was just to do the audit for fiscal 18, so it was just a one-year contract. Typically, we do a 3-year engagement with the audit firm. So, we are gonna need a contract for the audit for fiscal 19. And
a 3-year contract.
we need a 3-year contract. We could get a price from Melanson Heath. We could,
I think-
if you wanted to get proposals from other firms, it's,
What do you recommend as town accountant? You seem to have a
We-
good relationship with them. I think the presentation was excellent. That's my own opinion.
I think they do a thorough job.
Mhm.
Honestly, I mean, for me, I'm probably maybe not the best person to ask. I'm a little bit biased because bringing in new auditors is gonna be a lot of work.
Explanation and work and
Um,
training and teaching.
Right, to just get them, up to speed and familiar with how we do things here, so.
How long has Melanson Heath done the audit?
They've done the audit since 2000. Scott has always been the partner, and the staff has definitely varied throughout the years. The Ed Boyd, who couldn't be here tonight, did the audit last year, and
I think it is good to
Might have
switch
done
up
the year
partners,
before.
if nothing else, at Melanson Heath. I mean, it's in private world, you have to.
mhm.
You don't. But it's something you might wanna consider, just to have another partner sign off on it at the firm, and Ed's a partner as well. Is Ed Boyd a partner or principal, whatever?
No, he's an audit manager.
He's a manager?
He's an audit manager,
Is there
yes.
another partner there who could sign off instead of?
I believe there is.
Okay.
I believe,
don't
Frank
think-
Byron.
I don't think it's a bad idea to, just to, rotate, except no one's in there. I mean, I don't know how long Scott's been on it, and I think Scott's great, and so this is not any, negative thing to him. And I think the firm provides an excellent presentation to us. But it's, as you say, it's always not a bad idea. The firm's used to it, so you can have the same people, but
Mhm.
maybe, rotate a partner. And you don't know how long he's been on it?
Scott?
Yeah.
No, Scott's been on it since 2000.
Okay. So, it's coming up on 10 years.
Hmm?
2000.
No, 20 years.
20 years, wow.
This is 2019, Lynn.
I try to, I
No,
try to
you're
not to
trying to
think
slide
about
things by here.
it. I'll be 59 next month.
There you go.
2 months.
Again?
Yeah, God, no, not again. This is the first one. It's something to think about. I'm not gonna recommend that, but I don't think it's a bad idea. What's a normal, how are we, what's our rate compared to other towns right now?
In terms of what we pay for a fee?
Yeah.
Annual
Our
rate.
fee's pretty, I think the fee's pretty reasonable, actually.
Mm-hmm.
I think if you were to get quotes, you're gonna get relatively the same price. If you wanted to go for some of the other firms, Powers and Sullivan, Sullivan and Rogers, you're gonna pay probably at least 10,000 more, if not even more than that. I know the last time we got some quotes, in fact, last time, I don't even think Powers and Sullivan bid on it because of, what we were paying for a fee.
So when's the last time you got quotes?
For the last 3-year contract before this last 1 year.
Yeah, I mean, will they take 3%? I mean, will there be pushback or? I mean,
I don't know, I'd have to ask them.
I mean, what do they, they haven't come to you saying, this is what we propose? I mean, it's generally,
No, they have not done that.
Would we
I think
customarily
3%.
send out quotes, have quotes from 2 or 3 others?
That's what we've done in the past, usually when we're up for a 3-year, there have been times where we just reappointed, but,
It's probably prudent to at least go through that process if that's not too much heavy lifting and
mhm.
doesn't take too
Yeah,
much
I've
away.
been through that process at one point in the past, yeah. It wasn't too bad. And to go along with what Len was saying a little bit, it's a balance between having a new set of eyes look at it for a change and not become too stagnant and automatic about it.
at least at the partner level,
Mhm.
I would recommend, we ask for that, and Scott could pop on again 3 years from now, but
Right, but you wouldn't, to
you're saying even another
to
firm?
finish, you wouldn't want to just throw out somebody because they've been doing a decent job for
Which they have.
a whole number of years. Yeah.
But
Right.
it helps the town as well, and the price is good.
Mhm.
So I think I'm more interested in a different partner. And I don't mind the 3% annual increase if you're doing a 3-year contract, but I do think it's a fresh, that's one of the reasons why I actually voted for the operational audit, because we hadn't never done one, and just to get a fresh set of eyes on how the town's doing, I didn't think it was a bad idea. I always question some of the motivations of the supporters, but I didn't think it was a bad idea. But so, and just likewise, I don't think it's a bad idea, and I don't think Scott should be happy that it stays with his firm
Mhm.
and would help out. But the other partner, that would be my recommendation, is that we do, we do get a different partner on it from the same firm, because you're getting a good price. And the 3%.
Well, to stipulate maybe on the side.
Or at least rotate,
just to say that there was certainly no negative aspersions against anybody in that firm.
Well, even for the next audit, I actually would want him on, because of the big change on, what is it, GASB 84 he was talking about?
Yeah.
So I would say keep him on 1 year, but rotate after the next year, is what I would request. If somebody wants to bring up a motion, who could better articulate this than I can, I would be supportive. Chuck?
So I make a motion, would the motion be to lean toward Melanson and Heath?
Well, with the
I make a
3% annual
I
increase.
make a motion to, allow, for a 3% increase in the rate we pay over the next 3 years.
Okay,
A 3%
Not more
increase every
than-
year.
percent a year,
Not to exceed 3%.
not to
every year.
exceed 3%.
3%, and do we mention Melanson Heath in?
Yes, that's what we're recommending.
Okay. You got that so far?
Yep.
With a change in audit partners after, what's the next year?
In years 2 and 3.
In years 2 and 3.
For purposes of,
Objectivity,
Getting, 20 years is a long time.
that's a long time.
Okay,
Yeah.
I think that's fair.
second,
Second, all in favor?
you got that?
Unanimous. Okay. Last thing is operational audit, just a spreadsheet that I will love to finalize and put in PDF to present to the selectmen on February 11th. Did we have any indefinites here? Cause I was at, if anybody wants to go over their last list.
Yeah, did you send that around?
No,
Same.
because I hadn't, I can tell you where I was at. I was at a bottom line of a net of negative savings of 91,998, and maybe we should just go through the finals.
oh, yeah, if we could go through that again.
Let's
I-
do that,
from-
cause it's, just to put it to bed,
From the
let's,
June one, it was like around 98,000.
okay, well, I must have missed a couple thousand here or there,
The number and the calculation is in the June minutes.
okay.
Um,
So
I don't know
I'll
if we made
refresh what I
any
have on my,
changes since
I'll
then.
refresh what I have on my screen, so,
There was a question in June too about the center school custodian, which I don't know ever got
There-
resolved.
I think it was
So
resolved.
it
in-
never,
did
I
look it
don't
up.
think there ever was.
right, we said not
There was
done.
never a half,
Yeah,
There was never half-time,
No.
there were 2 full-time, and
Right.
that didn't change.
right.
Here, I'll give you if someone can update this is what I have on my last, and I may not have saved it, so. I had, student athletic fees went from 150 to 250, generating, a $44,000 savings.
Yep.
well,
that.
it's a little more nuanced, so
Okay,
gymnastics, hockey stayed at 250.
and then
Basketball
basketball
and
and
football.
football went up to 250. But
But
I
we
think
went
you
40
should change the name of it. It's not athletic gate receipts and athletic, you could leave it as
No, there's two of them.
athletic fees.
I said, base
Okay.
fee, the base fee netted
Yeah.
us the $44,000
Right.
increase. That's
But
what that's
but-
where I am on that.
But I know, but what's athletic gate receipts, isn't that?
We had nothing, we have nothing
Oh.
in there,
Okay,
yeah.
That was just
The
a
recommendation was
coordinating.
compared to others in the Hockomock League,
mhm.
and that's what they asked us to do, and I think nothing has been done. We said, you know, I don't know if there was a comparative.
MIAA gets the,
When it's tournament.
oh, right, okay.
So if you go up to a basketball game tomorrow night, you're gonna pay $5 to get in, or whatever it is. That goes into, that hasn't changed.
If you go to a hockey game, you pay $7.
And who does that go to? An ice hockey game?
Mm-hmm.
I don't know who that goes to.
I don't think it comes back to us,
But I
because I
think-
know that when we waived the fees
Mhm.
for, there was like a pack the rink kind of thing, the boosters had to calculate how much was owed and pay that out
Really?
to somebody,
Oh, that's
yeah.
not good.
But if you go to the Moscato Stadium or to the gym at the high school, you pay, like during
Right,
the
so if you go to
regular
a
season,
football
you pay.
game, who do those gate receipts go to?
Well, the schools.
The athletic.
I'm wondering if it's
department.
different hockey.
it goes
It
in a
to
revolving
the
fund.
athletic gate
It's the
receipts.
reg-
We don't own the town, we don't own the, hockey arena,
No.
obviously, so that's probably the difference, correct?
Maybe.
Okay. Well, I had 44,000, and it
Right,
wasn't in
and
gate
that's-
receipts, it was in the
It
base
was
fees.
going up on those yearly fees.
Right.
Yep.
All right, so I don't think that's changed since we last spoke.
No,
Um, Yeah, so there was the preschool tuition increase, it was 15 recommended, but we said no changes,
there were no changes.
right? Contract cleaning services, we, I think what we said there is that, this is school services, that they really didn't even understand what we were doing. And that we
They
did,
just
we,
used
we,
it.
we had zero, and we
Right.
didn't think they really understood what this was about.
I
It was-
think we just have our regular clean, our custodial staff and
Yeah.
that's where it's at.
So we wouldn't save a dime, because we're,
We wouldn't spend anything.
right,
either.
exactly. So that was zero, so we're still at 44.
So the
The lunch
lunch
price
prices
increase-
did end up going up 25
Five
cents over the past, in a combination of the past 2 years.
So we said that's 25,000, because it's 2 years. The 17th bus, we said zero.
Right.
Mhm.
Out of district ride sharing,
I don't know what the savings is on that, I know they use it, but I don't know,
we had zero,
okay.
okay. Eliminate the half FTE, full-time employment, so it's 50% of a full-time center school custodian. Nancy, I think you said you were gonna find out, but you didn't think anything was there.
There is no halftime.
That's what it was.
Right.
There's no halftime, so that was a zero. On the other side, they said add a full-time OEHS custodian, and we said no, that wasn't done. So we didn't increase the budget for that. Add school resource police officer, and I know this is always a hot item at town meeting, but we
So
did.
police have that in their budget, they have there's a halftime SRO that splits their time between Easton and the Southeast Regional School.
So how much does
But
that
that's in the
cost?
police budget, I
That
don't
really
know.
didn't amount to
I
a
think it
staff
was a
increase.
regular- I think
Right.
it was his,
It was just an allocation of time, so we have
I mean, they
zero.
could have used an extra one, but we didn't hire an extra
Right.
one.
right,
So it's zero.
So it'd be
Zero.
zero.
Okay, so we're still, so I think we're all agree where we are now. Add police detective promotion, that was a cost to the town. They said 71,172, I think the actual was 68,817,
That's what I have, yep.
Yes.
okay. Add deputy fire chief, they said it would be 111,703, we have 92,181.
Yes.
And so I added my column up and got 91,998. Negative.
Negative.
Right.
Oh,
So-
okay, because at the last meeting, or, no, sorry, not the last meeting, but at that June meeting, we had picked up the 200,000 as, even though we couldn't really quantify that specifically, but we were doing the ride sharing, so
But we were already
at that
doing
time,
it.
we had picked it up.
Should I add that to say it's a savings or not?
I
Is it
think
something we
that's
weren't-
been, it's BICO, right?
Yeah.
So that's been in place, my understanding is
Right.
for quite a while.
Before
So
this
I,
audit.
yeah, so I think they were looking at, they didn't audit that during the operational audit. I think the operational audit references a special ed transportation audit, which had been done back in like 2015.
right.
Mhm.
So,
And Dr. Cabral had reported that they looked at this extensively about how they could consolidate or do rideshare, and wherever they could, they already were.
Right.
That there were
And we just
no
had a meeting
new.
with
That was
just the
one
other
where,
day,
that was
and-
one where we
Right.
said
They
that they,
just-
no additional
Abrams
opportunity.
really didn't understand what was
Right,
actually
what was
going on.
Right.
Right,
So,
and you can put it. you
and
know,
the addition on the, just for the record, the addition, the largest addition was the employee contribution on, I wanna say health benefits or all benefits, they said would have yield us 408,000. And as far as I can remember, when I was on finance committee back in the 90s, it was always like, you're just robbing Peter to pay Paul. All you're really trying to do here is, we say healthcare goes up higher than salaries go up, so we move one to the other, and it would never save $408,000. And it's also dependent on contracts, so we
have
said,
those,
we
have
s-
those contracts been finalized, or are they in process now?
Some of them have been finalized, there's still a few outstanding.
Has this
There-
changed at all?
That has not come up as a
A bargaining.
bargaining item, yeah.
Okay, so that was the 0. So I'm at 91. I'm gonna put this on PDF and I'll send it out. I'll send Dottie a copy so that they're prepared for February 11th. We're minus 91, 998. The audit itself was.
Could you give me a
seven-
copy of that too?
Of course.
Hmm.
The committee will all get it.
Yeah.
I'm gonna send one to Dottie as well. So the audit itself, we had already voted on that, or we maybe didn't vote, but we certainly weren't recommending another operational audit. The town's not currently funding, reserving for it, as I should say. So the cost was somewhere $70,000, $90,000.
Yeah, we paid 69,000, 70,000 was the
70,000.
appropriation.
Well, we'll say it was appropriated 70, and we already voted that we're not doing that. And we don't see it in the immediate future, so we're gonna let the selectmen know that we already put that on the record. So, I'm gonna finalize this, put it on PDF, as a product of this, a deliverable product of this committee. Do I have a second on finalizing this at this amount?
Second?
Second, all in favor? Unanimous?
Just wanted to add, it might be worth noting too, that on some of these things,
And Wendy, you're
Just-
gonna be there, so to help explain.
yes, but if this, kind of just goes out there like by itself, to just maybe put some context in there, that the 408,000, it's not like we decided, well, we're just not gonna do that, it's really not
I'm gonna take out,
viable.
when I go final, I'm not gonna put all this stuff in this columns where my notes, where it says Nancy defined that, all this other stuff, that's all coming out.
Yep.
And all it's gonna be is numbers, and, if you could help explain for us about it when we go through it, I mean, I think that would be a big help, so.
Okay.
A couple of things that, I would hope we would talk about would be, and you could as well, the annual audit, at least the draft that Scott presented, and, talk about that, this, and, it's kinda like where we are, so. I'll put it on a PDF, I'll circulate it and, take comments, and, but all the verbiage is gonna come out.
Okay.
But I think I agree, though, that maybe some explanatory verbiage in the final document, something that's gonna get posted on the repository online, so
Okay, then
that
let's-
somebody looking at this.
Then let's circulate it and, we'll take comments.
Back to you.
Yeah,
Yeah, don't circulate the comments as a group, just send them all to Len.
yeah,
Okay.
yeah, so no discussion, but if anyone has points in any one item, please do that. And I'll circulate, I'm gonna put it on the PDF first, and people can put comments on each one. Everyone knows individually, more about these things than I do, so, in all honesty, so.
For the meeting on the 11th, if other members come and we have a majority, we should probably do some kind of posting for that. I can check
We
with the
need
town
to?
clerk to see
I
what
don't-
would be required.
I don't know the rules. Would that constitute a meeting if there are more than 3 of us together there?
I think you could have an issue
Then let's
without
post.
posting it,
Then-
so.
Okay, then let's post it for February 11th, that will be at the, Board of Selectmen meeting. I mean, Chuck is gonna be there. I'm gonna be there, it's 2. One more person shows
right.
up, we're done.
Yeah,
And I definitely,
I intend to be there if I can, and.
of course,
Be there.
so,
Right.
that's academic at this point, that everyone will hopefully have time to be there. Okay, so I think we're good to
Oh.
go.
I'll be there.
Okay. Next meeting, when are the elections?
Oh, they're late in April, usually around the 25th, I think.
Yeah, I think so.
I have it.
It should be right on your thing, right, that you handed out, or does it have election date on that?
No, the other page, it does. No, it just has the day I already have it in my calendar though, so hold on.
Okay.
So So it's April, I know what it is, April 23rd. No, yes, nope, yep. Hold on. I
feel like I'm on a
It's a Tuesday.
seesaw.
I think it's April 23rd. It's a Tuesday.
And the school
April
the school
April
vacation
23rd.
is the prior week.
Yeah,
Yeah.
it's the 23rd.
It's
So-
April 23rd.
Let's wait till the following week, the week of April 29th, which is good for me. It's after tax
So
season.
that's a Tuesday. Did you wanna keep it on a Wednesday though?
Yeah, we can keep it on Wednesday. We can go May 1st. May 1st.
Okay.
So. And, you know, I don't even know what would be on the agenda. We talked about student activity funds. We can, you know.
Yeah.
You know, recap where we are. I don't think it's gonna be a busy meeting at all, which is one of the reasons why I wanted to go quarterly. I don't know, Nancy, you would know better than I would.
Go ahead.
Yeah, you would know better than I would. Does the audit committee follow up anything coming out of, town meeting, or would it meet before town meeting or after, or, and you would know too, you know these,
No, it's
We
just-
typically haven't done that.
Yeah,
okay.
Yeah.
And how often did audit committee meet before,
well,
when everything was,
when the audit had been approved to be done, I think that people were meeting a lot, and they were long meetings too.
Yeah, but that was before the operational audit. Yeah, before the operational audit, they
We're-
were
we're
no
past
more than
that.
4 times a
It
year, and it
seemed
was
like
probably
quarterly.
usually less than 4 times a year.
so 2 or 3, you think?
3 or 4,
Yeah,
3?
2 or 3, yeah.
that's my memory. I think I was on for 3 years.
Okay. We can have a quick meeting then. I mean, we should go through the student activity fund. I don't even know what else.
And yes, it's April 23rd, yeah, for the election.
Okay, and then, my seat is up here in, I believe it's June 1st, so.
Sure it's not June 30th? It seems to
Yeah,
me
it's
that
probably
it
June
is
30.
Probably.
30th.
June 30th fiscal year,
Yeah.
okay. We should probably meet after that, do a vote. Someone else can do this, even if I'm on, someone else should do this.
Are you gonna seek reappointment?
I think so, but it depends. Mark Carpentier, at one point in time, don't put this in the minutes, he was interested in this spot as well, so, I would, everyone should get a shot and get fresh, voices, different perspectives, so, we'll see. But as of now, probably, yeah. Okay. So we'll set a meeting for May 1st if there's really not much to talk about. And it's good that we went through this, we can, cancel or postpone, so. All right, thank you, everyone.
Thank you.
Thank you.
Anyone with a motion
Make a
to,
motion to
Make a mo-
adjourn.
Second?
so all in favor? Thanks, everybody, see everyone the 11th, so actually the next meeting posted will be February 11th.
Thank you, Wendy.
Yeah, Wendy, that was excellent,
Thank you.
Thank you.
yeah.
Be at the meeting on the 11th, but if you wanna text me or something, you can. I have a